Our speaker in this second session for today is a well-known underwriter for the War and Terrorism class of business, Mr. Tarek Salihi. Tarek is the War and Terrorism class underwriter at Sagicor at Lloyd's Syndicate. Prior to joining Sagicor in the summer of 2008, Tarek worked for the Franchise Performance Directorate for the Corporation of Lloyd's, where he was responsible for approving and monitoring syndicate business plans with respect to underwriting and operating performance. In addition, Mr. As-Salihi had the responsibility of being the Lloyd's market representative for the terrorism class, which consisted of him providing support to the markets that write the class. Also, prior to that, our speaker worked for AIG for 4 years in their major account division. He has a BS with honors degree in economics with political science and MS in financial economics and has his ACII. He is now currently studying for an MA in terrorism studies. Again, let us all welcome Mr. Tarek As-Salihi in his presentation about the political violence in the Mediterranean region.
Good morning. I'm afraid I'll be conducting this presentation in English. I'll try and speak slowly. If anyone has any questions either during or after the presentation, please feel free. First, I'll give a background of who Sagicor are. Sagicor is a Caribbean life insurance company set up in 1840. About 3 years ago, whilst I was working for the Lloyd's Franchise Performance and Corporation, they came to Lloyd's wishing to set up a new syndicate within the market. With my assistance and through a few of my former colleagues, we helped Sagicor purchase and acquire the old Gerlin at Lloyd's Syndicate. And from there, Sagicor at Lloyd's was developed and is now a prominent Lloyd's Syndicate within the market. As I said, Sagicor purchased the Gerlin at Lloyd's Syndicate, both the agency and the syndicate. For 2010, the syndicate has a stamp capacity of 200 million pounds sterling. It writes all major classes within Lloyd's. Its strongest teams probably would be the property, accident, health, and sabotage and terrorism, but are able to provide capacity on all of those following lines. Sabotage and terrorism, political violence account sits within the Special Lines Division. Special Lines Division is where I run the S&T account, but we also offer professional indemnity, management liability, and product recall. The syndicate strategy, not just limited to my book, but across the whole syndicate, is due to the fact that we are still a growing and new entity. We prefer to position ourselves in the SME middle market, where we have an appetite to write primary and low-level primary business excess of deductibles. However, for large risks, large major placements, we're very much an excess player and are able to provide follow-line capacity up to strong high limits on large market placements. So, really, what you're here for? What is terrorism and political violence, and what do we cover? The word terrorism can be recalled back from the 1790s and it was used to describe the activities of the Great Terror during the French Revolution. Unfortunately, there's very little history that goes back to this with respect to terrorism. However, I've given you some major events that both have been insured within Lloyd's and that hopefully most people will recognise. Most notably, 7/7 London bombings and the Madrid train bombings, and most recently Mumbai hotels. These are all large market events, both insured and parts uninsured, such as Munich Olympics, that are used as benchmarks and as used as proxies to sell to clients and convince risk managers the need for terrorism insurance. So terrorism, political violence insurance, very much a recent phenomenon, a recent class of insurance. There was a very limited amount of this cover bought as standalone prior to 9/11. If it was provided by a London market or worldwide reinsurers, it was very much part of a property all risks or a marine cargo, marine transit type cover, very much sublimited to very small limits. 9/11 changed all that. The class developed almost overnight, and led to what is now a sophisticated market within the Lloyd's, and very much a large premium earner for the Lloyd's market. So yeah, the impact of 9/11. Insurers and reinsurers sought to exclude terrorism from the property and marine markets. As I said, that's where it was. That was the home prior to the events of 9/11. In November 2001, it was very difficult to find more than $100 million capacity for standalone terrorism cover. However, in 2010, both within Lloyd's and with largely Bermudan and US markets, there is up to $2.8 billion that can be found. Some of the major airlines are probably those that buy the highest amount of cover, in excess of $1 billion. Products have developed from pure sabotage terrorism type cover to now include all various forms of political violence type perils. And we're now looking at a direct premium of about $750 million within the Lloyd's marketplace. Wishes to the market rights. Property and business interruption on the standard T3 wording was very much developed within weeks of 9/11 happening. A lot of the early insurers seeked the competitive advantage of getting a wording out early, and there was a large collaboration between some of the key market players to get this wording. It was largely developed on the back of an LMA 3030, which it was a wording that was historically used to write in countries such as South America, where the threat of terrorism had been quite high, and were, prior to 9/11, sophisticated buyers of the class. Wordings have then have developed and include additional perils such as the strikes, riots. On the LPO 437 wording, this is very much the type of wording that's sought in Africa, parts of the Middle East, again, large South America, and more developing economies, where the threat of more strikes, riots, as a result, whether it be workers and employees of companies, is the main threat. Recently, I'd probably say over the last couple of years, these political violence perils have expanded further, and now will include perils such as insurrection, revolution, rebellion, malicious damage, war, civil war, mutiny, and coup d'etat. These perils, we appreciate, are very difficult to define, and there is very much a blur between the perils. If you take the instance of Bangkok, Thailand, in May early this year, most of those perils were written on policies, and it's very difficult to distinguish these type of perils and what events they may lead to. So the marketplace decided to offer these perils as a suite. So for clients and then for insurers and for cedants, there's less manoeuvre for argument, debate, and for insurers to get out of claims. By offering the full suite of perils, hopefully we're providing some peace of mind to the clients that they have the majority of their risk covered. Myself and Lloyd's, we write worldwide. Lloyd's as a marketplace has licenses in over 100 territories now. Sagicor and my knowledge is quite extensive from within the Latin America and Middle East, GCC, MENA region, and these are the two regions in the world where I personally are happy to provide capacity and insurance. basic exclusions on all of the wordings are those that are addressed. However, markets are able to write buybacks on these, and certainly Lloyd's as a marketplace, it's very much a market of all types of risk can be bought, and all of these can be covered, can be bought somewhere. They're just not within the standard terrorism policies. So the reasons for purchasing cover are generally pretty obvious. However, in the Middle East, and which links largely with the previous speaker's presentation, there's a huge amount of economic growth in the MENA and GCC region. The threat of terrorism, political violence may be very marginal, very small in these countries. However, if these companies that are looking to expand and take advantage of economic conditions, the majority of lenders within the region, both this region and worldwide, would insist that political violence cover is purchased, even for small limits, to satisfy a lender's demand. This reason for purchasing cover is where we're seeing the largest increase and growth within the market. Alternatively, there are territories in the world that have been sophisticated buyers of the cover and tailor the cover to their needs. Pakistan and Colombia are two prime examples where the threat of terrorism and political violence is very inherent. They're two countries, amongst others, that the threat is there, and as a marketplace we offer capacity to support those insureds and reinsurers locally. Last two, stability, peace of mind. Two main reasons for any class of business why a risk manager or a client would like to buy his insurance. Typical portfolio risks both within the Lloyd's and worldwide markets would include any of those listed. Hotels, predominantly the main risk that we see in London. The tourist industry as a whole has been affected in various regions around the world by the terrorist incidents, and probably hotels is the largest occupancy that buys the cover. But it's not limited. We department stores, retail, again, where a low level of violence and attacks can be coordinated relatively easy. We've seen in most major European cities, banks, real estate, international brand companies, all targets from all forms of terrorists. The larger accounts, the onshore energy, the telecommunications and the construction projects are all very large driven capacity accounts that we see as a marketplace, and those are the type of accounts where I alluded to before, where Sagicor as a market insurer will sit on a high excess. These kinds of accounts are written by sophisticated local insurers and purchase reinsurance normally at the top end. Basic underwriter factors, no different to any class of business really. However, the things that stand out, what a terrorism underwriter will probably look at, certainly would be the aggregation. Terrorism underwriting, terrorism political violence underwriting is subject to an amount of aggregate, an amount of limit or coverage that anyone would put in a blast zone. Terrorism underwriters manage their aggregation by a blast zone radius of anything between 250 metres and 1,000 metres, so not to overexpose themselves where the threat, where in large major urban areas. For standalone single locations, obviously the threat of aggregation is minimal and almost non-existent. But if you take a risk in the DIFC where there are many insurance companies, banks, retail, the chances there, as we saw, a classic example this year was Thailand, Bangkok, where a lot of insurers wrote plenty of risks, all types of occupancies in a very small square radius, and this has led to losses of high proportions for certain insurers where they're unable to manage aggregation. Other key factors what a terrorism political violence underwriter would look into would include the political and economic characteristics of a country, and certainly the electoral results and electoral activities. there's generally a correlation between electoral activity and increased frequency in incidents. Sajidor and Shadid in the Mediterranean region. Through my syndicate, we developed a relationship with Sajidor Re several years ago, more on the property side, where Shadid and their expertise was able to provide service and service clients in this local region through a binding facility. I myself and my team have developed that further by expanding the perils that both companies are able to offer through their partnership, including the S&T and political violence. Shadid Re now have full binding authority to write terrorism and the political violence on my behalf. The advantage of this is we have there's a local presence that's able to meet local insurers' demands. They're able to provide a quick, speedy turnaround, and hopefully are able to offer a more competitive product and price, as opposed to having your risks sent directly to London, waiting days, and for a broker to have to place it for the London market. We feel that through the two companies, we're able to develop a much speedier, competitive product through working together. So our exposures in the Mediterranean region are mostly limited to these four territories. If I discuss Lebanon first. The Lebanese market is actually one of the markets that has been a sophisticated buyer of the coverage even prior to 9/11. Most reinsurers that provided this type of cover was writing Lebanese business, whether through property all risk and marine type covering terrorism. As I said, Lebanon has a long-standing history of capacity being provided from London. The marketplace as a whole writes all major occupancies, including the power and chemical risks found down in the south and the hotels and communal real estate that we find in the middle of Beirut. However, pricing in this territory is heavily dependent on available aggregate. As I mentioned earlier, terrorism underwriters are very much subject to the amount of aggregate, the amount of limit they have in any one particular blast zone. Beirut, as we know, is a very built-up area and plenty of assets that are insured both within the local and worldwide markets. So price is very much dependent on how much aggregate anyone has at any one time. To date, Sajidor has very little business in this territory. However, with Shadid Re, we're working to increase our presence and appetite in this territory. Egypt is a territory that is very heavily dependent on its tourism, and through that has suffered most recently in 2004 and 2005 on its attack to hotels. Hotels, power, energy risks are very much the type of Egyptian business that makes its way into London. Again, these are large accounts driven by the amount of capacity needed. Most accounts in excess of between $100 and $300 million are almost certainly bought within this country, where London market experience and comes to the foreground is able to support these types of accounts. As I said, they are very much a sophisticated buyer of terrorism and political violence insurance, and they limit their perils largely to the strikes, riots, civil commotion, where historically the threat from local indigenous workers, employees, have caused property damage and business interruption, as well as the amount of the threats of pure standalone terrorism and its threat by Al Qaeda to its hotel industry. This is a country that's very much, again, at the forefront of the Mediterranean region in buying this type of cover. Again, alluding back to my previous speaker's comments and the growth of the southern Mediterranean region and the economic strength that we're starting to see, Algeria and Tunisia are very much new countries to the market for terrorism insurance. We're seeing a large amount of growth in their tourism industry again, certainly Tunisia, where hotels, real estate, commercial assets have increased almost doubling over the last few years each year. And we're seeing a lot of interest for clients from these two territories. At the moment, we as Sagicor itself are limited to more the oil and power generation risks that have bought for many years in this territory, and we don't see that changing anytime soon until there's more of a stronger presence locally with the appetite to certainly right terrorism, political violence, and then reinsure it into London. Mediterranean Europe. This is a region, again, that strongly have bought terrorism and political violence insurance for many years. Turkey, Greece, Italy, most prominent of Mediterranean Europe. All types of assets are covered within this region. They're strong in manufacturing, energy accounts, hotel and retails. This is a region that London market has been able to be extremely competitive on because of the low threats, and it's a part of the book that most terrorism underwriters like to write, and certainly adds diversity to the book and dampens the shocks of writing in such more high-profile, high-risk territories such as Pakistan, Colombia, where the threat of terrorism is obviously a lot higher. It's a nice area to again provide that diversification. Why do people buy? As I mentioned earlier, but some classic examples of in the Mediterranean region would include obviously the Madrid train bombings in 2004. Here, 191 people were killed, with 1,800 injured. It's very difficult to get an estimation on the damage caused by this incident because Spain have suffered from terrorism for many years through its separatist. Through the Basques, looking to separate themselves from the country. So they do have a sophisticated pull network, and the government provides terrorism up to a certain limit. So numbers are quite difficult to get by on this. However, it would be prudent to assume that anything over between $300 and $500 million was caused by this single event in 2004. A territory that has suffered for many years now is Turkey, and again another separatist typed group looking to break away from the current status equilibrium. Turkey has suffered from many suicide bombings, car bombings, normally very, I use the word unsophisticated level of terrorism, but the amount of damage and the amount of property damage, loss of life it's caused is extremely great. Very difficult type of terrorism to mitigate completely. However, as a London insurer and as a London marketplace, it's a territory that we like, that we do right, and we're able to offer a product to cater for their needs. International market claims. Everyone's aware of 9/11 has said it was very much the incident that led to the creation of a standalone class. 2,752 victims killed on the tragic day. This one incident has led to wars in two countries within this region. That now leads and breeds a political violence culture amongst certain countries in the world. And for this one event, it's now developed a whole marketplace and class, and which doesn't look like slowing down anytime soon. Ritz-Carlton and the Marriott, two major hotel chains, this time in Indonesia. This incident just goes to show that, again, hotel, real estate, commercial assets, wherever in the world, are soft targets, easy targets. Again, the property damage was extensive. The loss of life was there was 9 people killed and 50 injured. But it's the headlines that this type of event, this type of incident leads to. And it's headlines and press that a lot of these terrorist groups live and die by. And the more they're in the news, the more softer targets they can attack, the more this class increases. Most recently in London, even in a large one one of the largest incidents in Western mainland Europe, 7/7 bombings. Again, a soft target, such as a train and metro infrastructure was targeted here very early in the during rush hour in the morning of July 2007. Again, easy, four people, suicide bombings, very easy to conduct and coordinate. We're able to take out 3 trains and a bus between the 4 of them. The damage, again, reasonably high, and 52 people tragically died. But again, it's the interruption and the press release and the rapid mobilisation of support that these type of incidents lead to, that is breeding terrorism within the world. That's it. It's the end of the presentation. I'll be happy to answer any questions at any time.